Hi everyone, welcome back to the channel. If you haven't liked and subscribed below, definitely do so. Got a lot of great content coming out here, and today we're about how Social Security gets taxed. I know you're thinking, for now, all right, well, at the moment, it does get taxed. We'll see if Trump does get that tax removed. Um, Likely or not, we're not really sure yet. Nothing's come out, but right now it does get taxed, and it's important to know how it gets taxed. And we have some strategies that you can actually use to help minimize your taxes throughout your retirement and what that looks like there by knowing, this strategy and how these rules work around Social Security. So we're going to jump into it. First things first, yes, it can get taxed Social Security, but it all depends on your provisional income. So what is provisional income? That is what Social Security uses, right, as your number to determine what tax bracket you are in for Social Security. Now, what's included in there? First, it's half of your Social Security. Okay. So if you have a $40,000 Social Security income with you and your spouse coming in, then $20,000 gets counted towards provisional income. Okay. First thing. And then any other taxable income that happens could be capital gains, could be distributions from your IRA. Um, all taxable income gets counted in the provisional income there. And also, one source of income that is not taxed does get counted and is municipal bonds. So if you have municipal bond income coming in, that does count towards your provisional income for Social Security. Why is that? There's really no rhyme or reason. It's just how Social Security calculates this number. So keep that in mind if you have municipal bonds. Now, this number, depending on what it equals to, is going to determine how much of your Social Security can get taxed. Now, right now, today, if you're single, okay, here are the numbers: $25,000 and lower on the provisional income scale, 0% of your Social Security will get taxed. Now, if we're in the 25,000 to 34,000 range, 50% of your Social Security gets taxed. And if we're making over $34,000 on a provisional income, up to 85% of your Social Security will get taxed there. Okay. So that's important to know. All right. You're single. Now, if you're married, here are the numbers here. If you're under 32,000 and you're married filing jointly, it's a 0% tax. 32 to 44,000, up to 50% now gets taxed. And if we're over $44,000, up to 85% of your Social Security gets taxed. Now, these brackets have not changed since 1985. It's 40 years since they've changed. They do not go up with inflation. Okay. So, what can happen here, and the problem with this, if we're in a spot where potentially, we're a married couple and we're at $42,000 in provisional income, and we know 44, it goes from 50 to 85. Well, if we have an extra 3 grand of income come in, maybe it's from our money market account, maybe it's from these municipal bonds, maybe a dividend that you receive from a stock, and you get bumped up from 42 to 45, we call that a tax torpedo. Because yeah, you're only making $3,000 extra, but now, an extra 35% of your Social Security is going to get taxed. It's a big deal, right? It's going to make a big difference in your planning. So if you're kind of on the line with these numbers, how you plan out your income for that year and how you invest your money, if you're in a taxable account, especially like dividends, bonds, right? If you have these income driven investments that you get taxed on, it could negatively affect your Social Security tax going forward. A lot of stuff to plan around this. And what could happen further? I mean, we can talk through some survivor benefit stuff. I mean, if someone were to pass away, one spouse passes, and let's say that one spouse, was getting $2,000 a month, and the other spouse is getting 3,000. Well, one spouse passes away, the surviving spouse will get the $3,000 a month. But one thing to kind of note here, you're also going to drop from the married filing jointly bracket to the single. And what can happen is you might go from being in that 50% taxable bracket married to then jumping up to the 85% taxable bracket as a single. So now more of your money is getting taxed and your Social Security has went from $5,000 a month down to $3,000 a month, and you're getting taxed more on it, right? Stuff you might want to just plan for and just make sure you know, hey, if this were to happen, here's how this scenario would play out. And this is why it's really important with Social Security in general to know what your other assets look like. Because if you got a Roth IRA and all your money's there and everything comes out tax free, well, you should pay zero, technically, right? Social Security, tax income, nothing gets taxed because you have a Roth account you're pulling money from. But if we have a 401k or an IRA that's pre tax and it's taxed to get the money out, then we're probably going to go into these higher Social Security tax brackets. So it's important to note here and kind of look at where you're at from a tax situation. Now, once you get to 85%, that's your cap. So Social Security technically is still a little more tax efficient than normal IRA distributions because only 85% of it gets taxed. Right now, it would be nice to get to 50, even better to get to zero. But these are things you definitely should look at in your retirement planning and figure out what bracket you can put yourself in and what do you have to do with your other investments to help you get there. Hopefully you learned a lot, packed a lot of information in this 6-minute video here. If you want to know more about Social Security, we got a playlist below you can click through, and there's a lot of videos you can learn about Social Security. If you haven't liked and subscribed to our channel below, definitely do so. And we will talk to you folks soon. Thanks.